As you look at what we're seeing in the equity market, S&P up 0.3%, what is going to be the election impact?
Well, you were discussing earlier that elections may not matter if they result in some kind of gridlock, but I think it depends very much on the circumstances. And we have to see this election in the context of growing global uncertainty about political outcomes, geopolitics, and of course, the macro prospects of where inflation peaks and what impact will it have on growth. So I think in a very uncertain world, elections and uncertainty about what that may result in is just going to add to risk premia and volatility. So in that sense, I don't think this is going to compound other issues which investors are very uncertain about.
Peter, a lot of people ascribe the current inflationary surge that we're seeing to the fiscal impulse that we saw coming out or during COVID. If we get gridlock in DC, is that disinflationary because you don't continue with that fiscal largesse?
Well, I think it's a complex mix here of inflationary drivers. Some of it is about excess demand that came from accumulated savings through the pandemic. And that demand surge has caused inflation, particularly when supply has been disturbed by the effect of the pandemic. But part of it is also about supply side issues, long-term underinvestment, for example, in energy, tighter labor supplies and labor markets. And it's not clear that raising interest rates is going to be a resolution to that. And it's not clear that some gridlock in terms of politics and the inability to respond at all fiscally will also be a resolution to these longer term complex problems.
But Peter, what it does seem to point to is the risk that we hit a recession next year in the US and at the same time don't have the kind of government that can just start pumping money into the system. So if we have more fiscal tightening at the same time where we get a recession, how does that then potentially affect your outlook?
Well, I think, as you say, that's a clear additional uncertainty. Let me emphasize, though, that we don't think the US will go into recession next year. Our economists put the probability at around 35%, and there are some reasons to be quite positive. But of course, investors don't know that for sure. And the extent to which any weakness in data may increase the implied probability of recession with limited levers to do anything about it, that again will increase, I think, risk premia in risky assets. And, an additional reason why we think that what we're seeing at the moment is a bit of a bear market rally, and we'll see more volatility in risk assets in the nearer term.